Our guest says there are signs that U.S. President Donald Trump is opening up to the possibility of resolving this trade war. Of course, he hinted over the past week or so that he's open to reducing the tariffs on China if they come to the table. But then, of course, Beijing disagreed with Mr. Trump on whether talks are actually taking place. We're joined now by Petursson, Chief Investment Strategist at IG Wealth Management. The markets, thanks for joining us. The markets rallying last week, especially south of the border. And do you think that was mainly because Trump was expressing more openness to reaching deals?
I think so, and that's what this is about right now. It's about what is the message coming out of the White House, and it seems that Trump has taken less of a hard line and seems to be walking that back, saying we're willing for a deal. We've got 200 deals on the table. Whether that's true or not, I don't know if it matters as much as just the sentiment and the turn in sentiment, which is becoming more positive, that we are going to see a resolution. This isn't going to continue through the whole year because we know how far I think the market will push Trump before he starts to back away.
Let's have a look maybe at a one-year chart for the S&P 500 and a look at the US dollar over the past year, because both of those asset classes have rallied.
Yeah, they have. And so, well, the U.S. has rallied up to the inauguration, we would argue, and then shortly thereafter the inauguration, we started to see it sell off. And then the U.S. dollar recently has sold off against most major currencies around the world. And
it hasn't recovered that as much as I thought. Anyway,
no, it hasn't. It hasn't. And that's really interesting because the U.S. dollar has broken down its historical trade relationships with which is usually interest rates. So U.S. interest rates against European interest rates, being the U.K. gilt or the German Bund. Your U.S. interest rates against Canadian interest rates. And so when you look at the interest rate environment, it would suggest a stronger U.S. dollar. But what we've seen over the past couple of weeks is that investors have been fleeing the U.S., pulling money out of the U.S. and going elsewhere around the world. And that could be why the Canadian dollar has strengthened, is because money's leaving the U.S., coming to Canada.
What are your fund managers at IG? You guys run a lot of money. Have you been in your portfolios? Have you been lightening up on U.S. stocks?
Actually, we've been adding a little bit. So heading into this, let's go back to the election last year. Then we were lightening up on U.S. stocks because the valuation was a lot higher than what we saw in Canada and other areas around the world. We had a sense that if Trump was going to win, obviously tariffs were going to be on the table, number one, and that was the biggest headwind for the markets. So you wanted to be lighter U.S. equities coming into 2025. What we've been doing in the last couple of weeks is actually adding a little bit back to U.S. equities, adding back to equities overall, because we've seen those signs in the marketplace that say, hey, you know what, if we're not at the bottom, we're pretty darn close.
But the clients, just broadly speaking, you've seen your clients, unit holders, lightening up on U.S. funds?
Well, not necessarily our clients, but we've seen that in the industry. We've seen,
I see. Okay.
Yes, we've seen concerns towards the U.S. We have had clients say, well, I just want to sell everything out of the U.S., and we guide them through why that might not be the right decision. When we look at U.S. data, flows into ETFs and mutual funds, we've seen investors pull money out. Estimates are around 25 to 30 billion has come out over the last, say, 4 to 5 weeks. And that's showing that the retail investor, the uncertainty was weighing on them. And as is typical fashion, they just pull out of the market.
What about consumer stocks? Because we have heard that these price increases are just coming at us. It's like a tsunami that's coming at us. I mean, well, I'm exaggerating a bit, but there are going to be hikes in costs for consumers.
Absolutely. I would say it's that train that's coming in at a very, very slow pace, but you can see it coming towards us. And so what we're hearing from companies is that they have enough stock right now to hold price lines where they are, but come third quarter, into the fourth quarter, that's when they're going to be restocking, and they're either restocking at a much higher price level, which they're going to have to pass on, or hopefully tariffs will be behind us. Or the worst case scenario, which we heard a little bit last week, is the shelves will be empty. Now, I think that is a little bit more of a threat than what is the actual case that is going to transpire. But you have to believe that we'll see some pass-through of higher prices at some point in the back half of this year.
And essentially, the empty shelves, I mean, we have this incredibly elaborate and fragile global supply chain.
Exactly. And I think companies have done very, very well over the last number of years with just-in-time delivery, as opposed to buying your inventory a year in advance or whatever it might be. The timelines are much shorter, which means there is time to pivot. There is time to wait and see if these tariffs are completely removed before they have to place orders at a much higher price, and then the consumer is going to be the one to bear that cost.
I wonder, will there be a change in business? I'm just thinking about Costco. As you know, they've been successful with a pretty narrow product line. They don't offer as many stock-keeping units and keeps their costs down. Because, you know, we walk into a store, do we really need 40 different types of toothpaste?
Right,
I wonder, will retailers simplify things?
I think so, and retailers are certainly going to look for the lowest cost provider that can satisfy their customers. But this is the great unknown. This is the unknown that we're all kind of grappling with, whether it's on the business side in terms of how do I manage my inventories, or the investment side, which is what's going to be the pass-through and how much can the consumer bear before we see the damage done to individual companies or the economy as a whole.
Philip, thank you very much indeed.
Thank you.
Philip Petursson, Chief Investment Strategist at IG Wealth Management.